Larry, trade it continues to be one of the big issues, and certainly one we've discussed so often with you. This morning, I'm looking at a strategist piece out. It says, "Is the Kudlow trade framework crumbling?" Maybe you've seen it. Give me your take.
I saw the headline from my pal Dan Clifton. I didn't actually read the piece, but let me just guess. I'll lay out a framework for you, and you can go wherever you want to go. First of all, we are, again, talking with China. And I think that's very, very, very positive. The president initiated a phone call with President Xi. We now know that we will, in fact, discuss trade at the G20 meeting in Argentina. We didn't know that before, but that's a certainty. There'll be many things, security matters and so forth, on that list, but trade's going to be one of them. Right now, we're having communications at all levels of the U.S. and Chinese government. I spoke to Secretary Mnuchin this morning about that as part of our preparation for the G20. So without even thinking about a prediction on the outcome, we are talking to them again. You know me, I think it's better to talk than not talk, so that's a plus. We're in very good negotiations with the European Union. We're in very good negotiations with Japan. We did get the U.S. Mexican, Canadian, the MCA. So I think, we're moving ahead on trade discussions, and we had a very good deal in North America. So I think it's a pretty good story, to tell you the truth.
Yeah. Larry, the piece that we referenced at the top, it actually is trying to paint a more positive prospect for an agreement. But it's saying that because they're starting to say they see signs, Dan Clifton, of slowness coming in the economy as a result of the dispute. Investment slowdown in the third quarter, they say, is a major red flag that tariffs are starting to impact CapEx. Are you seeing that, and are you concerned about it?
No, not really. I mean, I agree that the CapEx numbers were a little soft in Q3. They have been very strong in the prior quarters. And actually, David, there may be some glitches in that numbers. Kevin Hassett, my colleague at CEA, the durable goods reports really look much better than what we saw in the GDP. We may get a revision upward maybe next quarter. I think that's still a strong area. Look, the tariffs that we impose on China, because of their recalcitrance, they won't seem to respond positively to our asks. Maybe that's going to change in the next month. I don't know. But those tariffs really haven't hit yet. They're really not in place. I think some of these companies are worried. I understand that. But nonetheless, we're doing what we must do with respect to China. In my judgment, IP stealing, transfer of technology, forced transfer, ownership, high tariffs on a number of commodities, cyber hacking. We can't let that happen. So I think the president is doing the right thing. But my point is to Dan Clifton, who I haven't spoken to this morning, is we are resuming talks with China. And it will be part of the G20, and I have to believe that's a good thing. And we are talking to the EU and Japan, and we did get the USMCA done, so that's not bad.
No, Larry, I think Peter Navarro had some things to say recently in terms of, I think, what you term Wall Street bankers and the like, trying to get their influence felt by the White House. I think we have it. I'd love you to listen to his comments and respond to them if you can.
If there is a deal, if and when there is a deal, it will be on President Donald J. Trump's terms, not Wall Street terms. But if Wall Street is involved and continues to insinuate itself into these negotiations, there will be a stench around any deal that's consummated, because it will have the imprimatur of Goldman Sachs and Wall Street. So I would urge these unpaid foreign agents to stand down on this issue.
Would you similarly urge Wall Street to stand down, Larry?
I would not. Look, Peter Navarro is a friend of mine, truly. We've known each other for 20 years. But he was not speaking for the president, nor was he speaking for the administration. His remarks were way off base. They were not authorized by anybody. I actually think he did the president a great disservice. Look, the president can talk to whomever he can talk to. He talks to people on Wall Street, yes. He talks to union leaders. I've been in some of those meetings, yes. He talks to other outside advisors. He has every right to do so. And the president has said, and I've reflected this on your network and elsewhere, that if there is a deal to be had with China, it's a deal that has to be in American interests along the asks that I just mentioned on technology and so forth. That's got to happen. So I think Peter very badly misspoke. He was freelancing, and he's not representing the president or the administration.
Larry, this is Morgan Brennan. I need to get your thoughts on the dollar because it's really bucked expectations we saw at the beginning of the year, strengthening pretty notably this year. On the one hand, strong dollar tied with strong economy. On the other hand, you're trying to increase U.S. exports and strike some of these trade deals, encourage U.S. companies to create more jobs at home. It's a headwind. How is the strong dollar being, discussed, and is it being involved in shaping policy right now?
Well, look, the dollar and currency matters are the purview of the Treasury Department. I will only comment lightly. The dollar today, which is king dollar, we have the best economy in the world. Investment is flowing here. I regard that as a good thing. I know it goes up and down. Basically, if you go back and run a chart, 18 or 20 years actually, the dollar is sort of right at the midpoint of that long chart. Up, down, up, down. In fact, in recent years, the dollar's been pretty steady, in my judgment. It is on an upswing right now. By the way, one of the benefits of a steady dollar, is a lower inflation rate. And one of the issues I've not heard enough discussion is disinflation. In the last 9 months, the PCE deflator, which the Fed watches, has actually fallen from about 2.7 to 1.4%. That's a terrific thing. That's supply-side tax cuts. We're increasing the potential of the economy to grow. When you create more, prices can come down. There was an inflation scare a little while ago. It's going away. I think this is a big plus. Inflation is the cruelest tax of all, and I think it's going to give a lot of relief, and it's like a tax cut for the economy. So I like that. And the rest of the dollar story, I'll leave to Mr. Mnuchin. But right now, king dollar, we're attracting money all over the world. We're the hottest economy. We're crushing it right now. China is in a slump. The EU is slumping. So they're coming to where the returns are best and the most hospitable environment.
Larry, with the Democratic control of the House right now, obviously a lot of the talk is stalled about feasible, tax cut 2.0 or anything like that. What is the administration's economic agenda on a going forward basis that's actually, practically possible?
Well, look, the president has said that he is more than willing to discuss, negotiate, talk to Ms. Pelosi if she becomes the speaker and so forth. He's willing to reach across the aisle. On the other hand, if they are more belligerent, then he will fight back. He's very clear about that in the press conference last week. Regarding our policy goals, we will be looking at additional tax reform, 2.0, if you will. There are other things. We're noodling inside the administration. We're working with the House and the Senate. Senate, by the way, is a very powerful body, so they're not going to let our tax cuts and deregulation and energy reforms be overturned. And if they were, the president would veto it. So I don't want to get ahead of our story. We're going to have a very tough budget. As you know, a 5% reduction across the board for the domestic non-entitlements. I think that's very healthy for the economy. We're looking at infrastructure in many different ways. The president, former construction man, real estate man, infrastructure. Right. We are working on the National Economic Council, the NEC. I'd like to do energy infrastructure. I'd like to do pipelines. I'd like to do anything that will help LNG, terminals, shipping. We'd like to revise the U.S. shipping industry, which has been dormant for many years. We'd like to export oil, nat gas, LNG to Europe and to Asia. Those are very important issues. My conversations with European leaders, they want LNG. They want it badly,
right.
And we're going to do whatever we can to accommodate.
Larry, final question here. I want you to indulge me, sort of take us back a year or so when you and I would typically be talking before you'd be coming on, and you'd say, what's going on this morning? And I would say to you this morning, if we were having that conversation, well, the market's worried that Powell's going to keep tightening to at least neutral. People are worried we're going to 25% on these tariffs on China. Earnings were pretty good, but guidance wasn't quite as good, and people seem to be a bit more scared in the market right now. Your response would be, if we were having that conversation, what?
You know, I would say corrections come and go. I mean, it's been a long bull market. We are way ahead of where we were in late 2016 after the presidential election. The market's done very well. We've had these corrections. You had one last winter, as you know. We're going through one now. I believe, at least at the close of business yesterday, the overall correction was 7%. I don't like that. I don't want anybody to ever lose money in their 401ks. But historically, as you know, that's a rather mild correction. So I think the economy is very healthy. I mean, I think profits are strong. You had a tremendous NFIB small business confidence number today. You had a good conference board consumer sentiment number. Profits continue to rise. The ISMs are very strong. I mean, I think this is a very healthy economy. The story here, in my view, everybody said we could never get 3% plus growth. We're getting 3% plus growth. And the tax cuts and the deregulation, the energy, the trade reforms, pardon me, I just think it's all paying off. And I think this is the best economy in years. So I remain optimistic, David.